Class, good evening. No? So our objective for today's meeting is to discuss your share-based payments. Okay, so let's start. So share-based payments class is under IFRS 2. Okay, so let's discuss the ins and outs of these share-based payments. Okay, so share-based payments. As the name implies, mayroong payment. Okay, kanino ba binabayad dyan? That is to be paid to the employees of the company. Okay? However, the payment is not the usual salary expense. Okay? This will be in the form of compensation expense, but not the usual salary expense. What is the usual salary expense? The usual salary expense is based on the labor of the employee, based sa kanyang pagiging empleyado. So this compensation na ibibigay natin sa empleyado, this is what? This is an additional benefits. Okay? So again, these are payments granted or to be paid to the employees of the entity. But this is a compensation not in the regular or usual or not the usual salary expense. This will be an additional benefits granted to the employee. Okay? And this one is based what? Based on the shares. These are now payments based on shares. Okay. Bakit kailangan gawin ng company yun? Kailangan gawin ng kumpanya yan. Actually, meron siyang internal objective dyan. May strategy siya dyan. Okay? Unang-una, bakit siya nakatali sa share? Bakit siya nakabase sa share? Kasi class, yung net income daw ng kumpanya, okay, ay malaki yung kinalaman ng pagbabago ng shares. What do I mean? The net income is directly proportional to the movement of the market shares. If the net income is high, the market value of the share is also high. So baliktad to, dapat to arrow down yung pangalawa. Okay? On the other hand, if the net income is low, meaning the market value of the share is also low. Okay? So, kaya niya itinatali based on share. Bakit? Kailan ba lalaki ang net income ng kumpanya? Kapag nag-perform ang mga empleyado. When the employees are motivated and performing beyond expectations, the net income of the entity will increase. It is assumed that the net income of the entity will increase. If the net income of the entity will increase, then the market value of the share of the entity will also increase. Kaya nakatali doon. So paano magiging beyond, no? Beyond par yung performance ng mga empleyado? Bigyan mo sila ng benefits. Bigyan mo sila ng compensation. Yan yung ikot ng share-based payments. Ulitin natin. These are payments to the employees and these payments are based on shares. Payments to the employees but not the usual salary expense. Again, share-based payments, payments based on shares, the payments to be made to the employees of the entity but not as the usual salary expense. And the usual salary expense is based on the labor of the employees. Okay? This compensation will be an additional benefit granted to the employees. And these payments are tied up to the shares. Because the net income of the entity is directly proportional with the movement of market shares. If the net income of the entity is high, then the market value of the entity is also high. On the other hand, if the net income of the entity is low, then the market value is low. Okay? So how now? So the strategy of the entity now is to increase the net income. And one of the strategies is what? To make your employees motivated so that they can perform well or beyond par. Ibig sabihin, if the employees would perform beyond par, it is assumed that the net income of the entity will increase and the market value of the entity will also increase. And how to motivate the employees to perform beyond par? Give them an additional benefit. And that is the reason why there is the so-called share-based payments. Okay. Ano ang form ng payments na ito? Why is that these are based on shares? Okay? These are the modes of payments. One is equity settled. The next one is cash settled. And the third one is at the employee's option, whether that is an equity settled or cash settled. Okay, or a combination of equity or cash settled payments. Okay, so let's start with equity settled. Pag equity settled class, ang ibibigay mo sa empleyado ay equity instruments. Okay? Equity instruments. Nga lang, hindi diretso na ibibigay mo ang shares. Okay? So, equity settled, what is to be paid or to be given to the employees are equity instruments, but not in the form directly of shares. Hindi ka agad bibigyan ng preference shares, hindi ka agad bibigyan ng ordinary shares. What is to be given is a share option. And what is then a share option? That is an equity instrument given by the entity to its employees, wherein that share option would grant the employee an option to purchase the share of the entity at less than fair value. Ibig sabihin, class, this is only an option granted to the employees, and that option shall give the right to the employees an option to purchase the shares of the entity at an amount that is lower than the fair value of the shares. So yun, hindi ka agad-agad. Okay? So what is now the measurement? The measurement of these share options, these are measured at fair value of the options, fair value of the options at the date of grant. Okay, fair value of the options at the date of grant. Paano kapag walang fair value at the date of grant? You will use, in the absence of fair value at the date of grant, you will use the intrinsic value. So, ang tawag dito sa dalawang methods na to, the fair value method and the other one is the intrinsic value method. However, ang default natin is the fair value method, or you will use the fair value of the option at the date of grant. In the absence of the fair value at the date of grant, that is the time that you will be providing or using the intrinsic value method. How to compute the intrinsic value? That is the difference between the market value of the share minus the option price. Okay? So let's proceed. So these share options now, okay, dalawa kasi yan eh. That is one, vest immediately or do not vest immediately. Pag sinabing vest immediately, ibinibigay ka agad yung share option sa mga empleyado and that can now be exercised. Kasi pag sinabing vest immediately, wala tayong vesting period. Ano ba yung vesting period? Wala tayong service period na re-require sa empleyado para ma-exercise niya ang share options. Okay? Whenever that is vest immediately, the share options granted to the employee can be exercised by the employee at once because there is no service period to be to be made by the employee, and there is no obligation of the employee to perform at a certain period of time before exercising the share option. Meaning, the total compensation expense then should be recognized in full at the date or at the year of grant. Okay? And what is that? That is the number of share options times the market value or the intrinsic value. Okay? So that is now the total compensation expense. Compensation expense in the sense this is an additional benefits. This is also called salary expense. Okay? Or remuneration expenses. Okay? But this, again, is not the usual salary of the employees based on labor, but this is an additional benefits granted by the entity to its employees based on shares. Okay? Ang share options naman, pwede namang do not vest immediately. Ibig sabihin, para ma-exercise mo ang share options, meron yan vesting period. What is again the vesting period? Vesting period is the service period required to an employee before the employee enjoys the benefit of exercising the option. Okay? And again, the share option is what? That is an option granted to the employees to purchase the shares of the entity at an amount that is less than the fair value of the shares. Meaning the total compensation expense here should be allocated based on the vesting period. Okay, if the vesting period then is 3 years, then that should be allocated in that number of 3 years vesting period. So to compute for the compensation expense per year, you have the total compensation expense times the cumulative vesting period. Let's say this is just the first year, divided by the vesting period, let's say 3 years, minus the prior year's cumulative salary expense. Okay, in year 2, total compensation expense times 2/3 minus the previous year or the year 1 cumulative salary expense. If you are now at year 3, you have the total compensation expense times the cumulative 3 years divided by the vesting period of 3 years minus the previous year's cumulative salary expenses. And the cumulative salary expenses as far as 20x3 is concerned is the combination of the salary expense in 20x1 and 20x2. Okay? So if that is now exercised, okay? So to journalize first the yearly compensation expense, you have the salaries expense, debit, or the compensation expense, and credit the share options. Share options is included as part of the share premium of the entity. If that is exercised, we have cash. Cash, why? Because this is just an option to purchase at below the fair value of the entity. Meaning there is an amount to be received. Let's say the fair value of the shares is 50 and the option price to purchase the share is only 30. So meaning there is a cash inflow in the form of the payment of the employee to the entity in the exercise of the option at 30 pesos per share. Ito yun. Then you have the share options, okay? Then you have now the ordinary shares. And if any excess, if there is an excess, then that is your credit to share premium ordinary. What if the options were not exercised and expired? Okay? So you will just reclass. Debit the share options and credit share premium. And that is the entry if the options were not exercised. Okay? Yan ay kapag equity settled. Okay? Kapag naman cash settled, ang binibigay sa'yo ay cash. Bakit merong cash settled? Kasi class, may mga empleyado na ayaw naman ng, yung ibig sabihin, hindi ganun ang mindset nila as an investor. So, una, sa number 1, sa mga empleyado na ang mindset ay maging investor, okay yan. Eh, yung ibang empleyado naman, parang hindi naman dyan interesado. O, kasi magkakaroon siya ng share tapos magbabayad pa siya. Magbabayad pa siya kasi bibili siya ng share nga lang mas murang halaga. Eh kung ganyan, pwede bang perahin na lang natin? O yun. Kaya merong cash settle. Okay? So kapag naman cash settle, bakit siya nakatali pa rin sa shares? Diba? These are payments based on shares. Okay? Kaya ito tinatawag na share appreciation rights. Okay? So these are the payments related to shares. Okay? So ang binibigay dyan, cash. Ibig sabihin, kapag hindi pa nagbabayad ng cash, ano meron si entity? Liability. Okay? How to compute na the liability? Okay? How to compute the total compensation expense that would now be equal to the increase in the liability? Paano nga, sir? Okay? The share appreciation rights is also based on the market value. So we will be using here the market value of the share minus the predetermined price. Ano yung predetermined price? The predetermined price, baka kasi nag-usap kayo ng ganito. Di ba, ang objective natin ay tumaas yung market value ng shares. Kasi ang assumption natin pag tumaas ang market value ng shares, ibig sabihin mataas din ang net income natin. So, ganito usapan natin. Tayo si entity, kausap natin si empleyado. Pag yan, let's say the market value of shares now is 100. Okay, 100. Ngayon, kapag yan ay tumaas, okay, tumaas, magbabayad ako sa'yo. Yan yung cash settled. Let's say naging 110. Oh. The market value of the share is 110. The predetermined price is this. Kapag tumaas ang ating market value sa 100, oh, di ba may usapan kayo, the predetermined price is 100. Kapag tumaas ang share sa 100, babayaran kita. Dadagdagan ko ang benefits mo in the form of this compensation as additional benefits. Okay, kaya market value of the shares minus the predetermined price. Paano sir kapag bumaba sa 100, di wala kang bayad, wala kang additional benefits. Okay, market value of the share minus the predetermined price times the phantom shares. Ano yung phantom shares? Phantom shares, these are what? These are non-existing shares. Kasi wala naman tayong ibabayad eh. Wala naman tayong ibibigay na shares eh. Okay? So these are the non-existing shares. But this would be the basis of your total compensation expense. Okay? Market value of the shares minus the predetermined shares, that is your times the phantom shares or the ghost shares. Ghost shares kasi hindi naman talaga yan ibibigay. Okay? So market value of the shares minus the predetermined price times the phantom shares, yan na, makakakompute ka na ng total compensation expense. And titingnan mo na naman, if that is vest immediately, meaning there is no vesting period, there is no service period, therefore, the total compensation expense now should be recognized in full. Okay? However, if this will not vest immediately, then the total compensation expense should now be allocated based on the vesting period. Yan ay ang iyong cash settled. Okay? Yung isa naman, yung option between the equity and cash, and the option is given to the employees. Okay? Magkakaroon ka dyan ng compound financial instruments. Okay? The compound financial instruments, by the way, sabi ni IFRS 2, is based on the share alternative. So you will compute for the fair value. You will use the share alternative here. That said, the share alternative is 12,500 shares times the fair value of the shares at the date of grant. That is now their compound financial instruments. Ngayon, ang unang pag brinik mo yan, ang unang hahanapin mo is the liability. Okay? The priority is to look for the liability. So that liability, so times the fair value, so makukompute mo to. Okay? This is based on the phantom shares times the intrinsic value. If there is no intrinsic value, then you will use the fair value. Okay? So the intrinsic value again is the market value of your share minus the option price. Or by the way, the intrinsic value can be used here. The market value of the shares minus the predetermined shares. Okay? If wala nun, then use the fair value. Okay? Then after getting the liability, the residual amount is your equity. Okay? So na-break na natin yung compound financial instruments. So meaning, at this number 3, under the share-based payments wherein the employee has the option between the equity and cash settlements, step number 1 is to compute for the value of the compound financial instruments. Step number 2, look for the liability, and the residual now will be the equity component. Okay? So the payments to the employees would be in the form of equity and liability. That is now your total compensation expense. Okay? So, having said that, let's now have the problem. Okay? Problem solving tayo. So, let's have problem 1. Okay? So, ito yon. So, this is our problem 1. So, sa problem 1 natin, anong sinasabi? Let's read the problem. January 1, 2021, Favor Company granted 30,000 share options to each of 5 directors. No? The options vest on, may correction dito. this should be January 1, 2021 and expire on December 31, 2022. Okay, so the vesting period here is from 2021 January 1 to December 31, 2022. Meaning the vesting period is 2 years. Okay? Meaning the employee will enjoy the option or can exercise the option after completing the service period, which is equivalent to 2 years. That is from January 1, 2021 to December 31, 2022. And each option entitles the holder to purchase one share, okay, 20 par, ordinary for 40. And this is now the option price. This is now the option price, okay? And the fair value of the options at the grant date would be 12 pesos, no? So meaning that is the measurement. The measurement of the option at the date of grant, and that should be the number of options times the fair value at the date of grant. On that date of exercise, 80% of the options were exercised and the rest of the options were expired. Meaning, 80% was only converted into ordinary shares and 20 were not exercised. 20%. Okay? So let's dissect first. What is the form of settlement here? The form of settlement here is equity settlement because the entity is granting options. Share option is an equity instrument granted to the employees, and that share option is a right, no, granted to the employees to purchase, no, the shares of the entity at an amount that is lower than the fair value at the exercise price date, exercise date. Okay, so this is now an option to purchase granted to employees to purchase the share of the entity at an amount that is less than the fair value of the shares. Okay, so what we have here, equity settled payments. Oh. Meron bang vesting period o wala? Meron. The vesting period is what? From January 1, 2021. Again, this correction, pakilagay sa notes niyo. This should be January 1, 2021. This is for 2021 and 2022. Not January 1, 2023 to December. Okay, yan yon. Okay, so to start with, ilan options ang ibibigay? 30,000 options. Okay? Ilang empleyado ang bibigyan? There are 5 employees to be given. Okay? What is the fair value at the date of grant? Fair value of the option, not the fair value of the share. The fair value of the option at the date of grant, that is 12. Okay? So this is 12. Okay? So this is now 330,000 times 5 times 12. That is now the total compensation expense. Okay? To compute for the compensation expense per year, ilan na ba ang nauubos sa vesting period niya? Di ba isa pa lang? So that is 1 over the vesting period of 2. So that is 1 over 2. Therefore, the cumulative compensation expense should be 1.8 million times 1/2, and that is 900,000. And the prior year's compensation expense, cumulative, prior year's cumulative compensation expense, since this is just the first year and this is now 0. So the compensation expense for 2021 would be 900,000. And the entry for that 900,000, that is salaries expense, or compensation expense, or remuneration expense, amounting to 900,000. And you have the share options equivalent to 900,000 also. Let's now move to 2022. In 2022, again, the share options is 30,000 shares options, share options. The number of employees remains to be 5. Okay? 5 ulit yan. Hindi naman nabawasan. Then the fair value is 12 at the date of grant. So this is 12 at the date of grant. And this is now 30,000 times 5 times 12. And this is 1.8 million pesos. Okay? But to compute now for the cumulative compensation expense here, that would be times 2 years over 2. So this is the last year of the service period. Okay, cumulative 2 years divided by the vesting period of 2. So this is now the cumulative compensation expense amounting to 1.8 million pesos minus the prior year's compensation expense. Prior year's cumulative compensation expense. Ayusin ko na nga para hindi ka malito. Baka ang gamitin mo lang yung last year lang eh. Prior year's cumulative compensation expense, which is 900,000. So this is now 900,000 also. And the entry for this, that is also salaries expense and credit, debit salaries expense of 900 and credit share options of 900. Okay? Pero sinabi niya, 80% lang daw of the options were exercised. Okay? Ibig sabihin, 80% lang ng 30,000 ang in-exercise. Okay? So, ilan yon? So, kung 80% lang yan, ang in-exercise natin, so that is just 80%. So, that is now 30,000. Okay? 30,000. Ito yun, 30,000 calcu times 80% eh. 80%, no? Times ilang empleyado? Times 5 employees times the option price of 40. Yan, i-debit natin sa cash. Ulitin natin. So here, sabi niya 80 lang ang in-exercise. So lagay natin dito, in-exercise ay 80% lang. So that is 30,000 times 80%. Okay? So that is 24,000 lang. 24,000 times 5 employees and the option price. This would now be the option price. In-exercise mo na eh. So, the option to purchase, option price is 40. Okay? So, this would be the cash that you will be debiting. So, this is 24,000 times 5 times 40, and this would be 4.8 million pesos. So, ang entry mo dito, debit cash, meron ka ditong 4.8 million pesos. Okay? Then, you have the share options. Okay? Yung share options mo na ipinalit ay ano lang, di ba? 80% lang. Okay? So, 80% lang nito. So, kung gusto mo, 24,000 times 5 times 12, that would be yung in-exercise. So, that is 24,000 times 5 times 12, fair value of the date of grant. Yan lang yung in-exercise natin. Equivalent to 1,440,000. So, this is 30,000 times 80% times 5 employees times the fair value at the date of grant. So that is 1,440,000. Ano binigay mo? Shares. So meron ka dito ordinary shares, and the ordinary shares should always be equal to the par value. Okay? So ilan ulit ang options na in-exercise? 24,000. Okay, 24,000 times 5 employees times the par value of the share of 20. Let's compute. So that is 24,000 times, so sige, simulan natin sa 30,000. 30,000 times 80%, no? So I have now 24,000 times 5 employees, no? And times the par value of the shares of 20. Okay, so this is now your credit 2,400,000 pesos. And the excess 4.8 plus 1.44 minus 2.4 would be your share premium, equivalent to 3,840,000 Okay? How about the expired? So that is just a reclassification. Debit mo si share options and the expired here is equivalent to 6,000 options times 5 times 12. That would be 360,000. Okay? The unexercised or the unexercised or the expired share options is equivalent to 6,000. 6,000 times 5 times 12, and that would be 360,000 pesos. And credit now your share premium equivalent to 360,000. Okay? Ano common na tinatanong? Ito, compensation expense for 2021, 2022. Okay? Let's go to problem 2. Dito sa problem 2 natin, ano ito? Ang sabi niya sa problem 2, okay? On January 1, 2021, Dream Corp adopted a share option plan which grants each of the 40 employees the right to purchase 10,000. Okay? So the number of share options is 10,000. 10 par for 15. 15 is the option price. Okay? The options were exercisable on December 31, 2023, provided that the employee remains with Dream. So if that is 2023, December, so the vesting period will run from 2021 to 2023, and that is equivalent to 3 years. Okay? The fair value of the shares was 15, and the fair value of the option was 6. So what we need here is the fair value of the option. Ito yun, no? The fair value of the option at the date of grant. Okay? Then, sabi niya, the company estimated that only 75% of the employees will be entitled to the option after 3 years. So again, 75, no, percent lang ang estimated ng employees will be entitled to the option at the end of the 3 years. Then, Dream Share at the end of 2021, 2022, and 2023, this is now 21, 25, and 28 respectively. At the end of 2021, 3 employees left, and the company did and estimates that another employees will leave the company by the end of 2023. Then at the end of 2022, 4 employees left the company, and Dream estimated that only 2 will leave next year. And by the end of 2023, the employees entitled to the grant left and all the options were exercised. Okay, so let's dissect the problem. Is this an equity settled or cash settled? This is an equity settled transaction because the company will provide share options. Is this vest immediately or do not vest immediately? This is do not vest immediately. Why? Because the employees are required to perform service period or vesting period for a period of 3 years. This is from 2021 January to December 31, 2023. Okay? So the vesting period here is 3 years. That is from 2021, 2022, and 2023. Okay? And how many options will the company provide for employees na nasa kumpanya pa at the end of the 3rd year? 10,000 options. Okay? So let's go first. Compute for the compensation expense for 2021. So, the number of employees for 2021, actual number of employees that is entitled is, the entity has 40 employees, no? 40 employees. However, at the end of 2021, 3 left the company. So that is 40 minus 3, and it is estimated that another 8 will leave the company by the end of 2023. So the number of employees that is estimated to receive the options or to exercise the options at December 31, 2023, that should be 40 employees minus 3 left in 2021 and 8 that is expected to leave the entity by the end of 2023. So there is now a number of employees equivalent to 29. Okay? So times now the fair value of the option at the date of grant. And the fair value of the option at the date of grant is 6 pesos. Okay? So that is now 10,000 times 29 times 6. 10,000 options times 29 employees times the fair value option at the date of grant. The total compensation expense is 1,740,000 pesos. Okay? Times the cumulative number of period performed. Since this is just 2021, this is times 1 over the service period of 3 years. So times 1 over 3. So the cumulative compensation expense would be 580,000 pesos minus the prior year's cumulative compensation expense. Okay? Since this is just the first year, the prior year's cumulative compensation expense is 0. And the compensation expense now for 2021 is 580,000 pesos. Okay? So the entry for this, debit salaries expense or compensation expense or remuneration cost or expense. So this is 580,000. Credit your share options of 580,000. Okay? Let's go to 2022. In 2022, 10,000 options. And that is still the provision, 10,000 options. But how many employees? Okay? We'll start with 40 employees. In 2021, the actual employees left is equivalent to 3. And for 2022, 4 employees left the entity. So that is 40 minus the prior year's number of employees left, 3, minus the actual employees left in 2022, and the estimated number of employees to leave the company at the exercise date. And that is also 2. So that should be 40 minus 3 in 2021, minus 4 in 2022. Those are actual numbers of employees left, and minus 2, the estimated number of employees to leave the entity at the exercise date. So this is now how many employees? So that is 31. So 10,000 times 31 times the fair value option at the date of grant, which is 6. This is now the total compensation expense. Total compensation expense times the cumulative number of period that is performed by the employee na nasa kumpanya pa siya, and that is 2 years. That is from 2021 to 2022 divided by the vesting period of 3 years. And this is now the cumulative compensation expense of 1,240,000 pesos minus the cumulative compensation expense in the prior years. So this is 580,000. So the compensation expense for the second year would be 660,000 pesos. And the entry is debit salaries expense and credits share options equivalent to 660,000. Then we have the 2023, which is the end of the vesting period. This is now 10,000, and the number of employees now is 40 initial minus the number of employees left in 2021, which is 3, the number of employees left in 2022, which is 4, and minus the number of employees left in 2023, or at the date wherein the options can be exercised. So that should be 40 minus 3 minus 4 minus 3, and the number of employees entitled to the option is only 30. Okay, so the fair value option remains to be the fair value of the date of grant, and the total compensation expense here is 10,000 times 30 times 6, and that would be 1.8 million pesos. Times the cumulative number of periods served, so that is 3 years divided by the vesting period of 3 years also. So the total compensation expense here would be 1,800,000 pesos minus the prior year's cumulative compensation expense equivalent to 1.24 million pesos. Okay, so your compensation expense for 2023 is only 560,000 pesos. And the entry would be debit salaries expense and credit share options. Okay? Once exercise, the entity will receive cash. Okay? And the number of options exercised is 10,000 options times 30 number of employees times the option price of 15. Okay? So that is, ano bang sabi niya dito? By the end of 2023, 3 employees entitled to the grant. At sabi niya, and all of the options were exercised. Okay? So the number of options is 10,000, which were exercised based on the given information in problem 3 times the number of employees, that is 30, times the option price of 15. Option to purchase an amount that is granted to the employee. Okay, an option to purchase the share of the entity at an amount that is lower than the fair value of the share. So that is now 10,000 options times 30 employees times 15, which is the fair value, which is the option price to purchase one share of 15. So we will be receiving cash equivalent to 4.5 million pesos. Then debit your share options because you will now exercise this, and that should be 1.8 million pesos, or that is 10,000 times 30 number of employees times the fair value at the date of grant. So this is 1.8 million pesos. Credit ordinary shares that would be equivalent always at par value of the shares. So that would be your 10,000 shares times 30 employees times the par value of the share, that is 10. So 10,000 times 30 times 10, and this is now your ordinary share. And the excess would be credited to the share premium ordinary. So this is 4.5 million, that's 1.8 minus 3 million pesos, and that is the share premium of 3,300,000 pesos. Okay? So this is now your problem 2. Let's now move to problem 3. Okay? Your problem 3 is what? So let's read. Options na naman. Options na naman. So equity settled pa rin ito. On January 1, 2020, Hyde Inc. granted 100,000 share options to its employees. The share options will vest at the end of 3 years provided that the employees remain in service until then. The option price is 40 and the par value of the share is 20. Again, the option price is 40 and the par value of the share is 40. Okay, so the option price is 40. Tandaan mo, baliktad yung pagkakasulat. Unlike kanina na una si par and after citing the option price. Okay? So here, the option price is 40 and the par value is 20. At the time of grant, date of grant, the entity concluded that the fair value of the share options cannot be measured reliably. The share options can be exercised within 1 year after vesting. Okay? The share options can be exercised again 1 year after vesting. So the vesting period is 3 years. So that would be 2020, 2021, and 2022. However, after, the employee already rendered the 3-year service period or the vesting period, hindi niya pa rin pwedeng i-exercise. Why? Kasi the provision, provides, the covenants. May covenant kasi yan kapag ganyan, meron diyang pinipirmahan na agreement, no? The share options can only be exercised within 1 year after vesting. So meaning that is now the period wherein the employee can exercise. After the vesting period. Hindi niya pwedeng exercise yan at December 31, but that would be 1 year. Within 1 year after vesting. Kaya meron ditong 2023. Okay? So, here, it is also equity settled because there is an option to be granted, which is an equity instrument. There is also vesting period here. The number of options, let's have 2020, the number of options is 100,000 options. That should be multiplied with the fair value of the options at the date of grant. However, the fair value of the option at the date of grant is not included. Okay? So, here, this is the equity settled. Sabi niya, in the absence of the fair value of the option at the date of grant, that's the time that you will be using the intrinsic value. Okay? In the absence of the fair value of the option at the date of grant, then use the intrinsic value. So the intrinsic value, that is the market value of the shares minus the option price. So here, it says that at the date of grant, the entity concluded that the fair value of the share options cannot be measured reliably. Meaning, we will now be using the intrinsic value because walang fair value of the options at the date of grant. So that should be market value minus the option price. The market value of the shares in 2020, that is 45. 45 minus the option price of 40. So the intrinsic value in 2020 is 5. Again, the intrinsic value is 45. The intrinsic value is 5. That is derived from, that is the difference between the share value, the fair value of the shares or the market value of the shares minus the option price. So this is 45 minus 40, the intrinsic value is 5. And this is now the total compensation expense, okay, times the cumulative number of periods rendered over the vesting period. This is just the first year, so times 1/3. The cumulative compensation expense then is 166,667 times the cumulative compensation expense prior years. That is 0 here because this is just the first year, and the compensation expense is 166,667. So the entry here, you have your salaries expense or the compensation expense, debit, and credit your share options. Okay? So in 2021, so the options remains at 100,000 pesos while the intrinsic value would now be how much? So in December 2021, the fair value of the shares is 60 minus the option price of 40. So this is 20. Okay? So this is now the intrinsic value. So 100,000 times 20, this is now 2 million pesos. Times the number of periods served, and that is 2 years divided by the vesting period of 3. Okay? Years. So this is now your cumulative compensation expense equivalent to 1,333,333 minus the prior year's cumulative compensation expense of 166,667. Your compensation expense for 2021 is 1,166,667. And the entry would be debit salaries expense and credit share options equivalent to 1,166,667. Then we have 2022. So this is now your options, 100,000 times the intrinsic value, but this time, this is now 58 minus the option price of 40. So this is 58 minus 40 is 18, no? So this is now the total compensation expense for 2022, 1.8 million times the cumulative number of periods served. So that is 3 over the vesting period. So this is now the cumulative compensation expense minus the prior year's cumulative compensation expense, which is 1,333,333. Okay? So the compensation expense here would be 466,667 for 2022. Entry for this, debit salaries expense and credit your share options. So here in 2023, sabi niya all options were exercised. Okay? This was exercised when? The end of 2023. Okay? So we have here 100,000. What is this? This is the intrinsic value. Okay? The intrinsic value in 2023. And that is the fair value of the shares of 65 minus the option price of 40. Okay? So this is now 25. Okay? So this is now 2.5 million pesos. Okay? Minus the prior years. Okay? Cumulative compensation expense. And this is now the compensation expense for the date wherein it was exercised. Compensation expense in 2022. Okay? So the entry would be, you have a cash, the number of options exercised is 100,000 times the option price. The option price is 40. Okay, so you will be receiving cash of 4 million. Then the share options, this is share premium share options because the share option is included as part of your share premium. Yan, share option of 2.5 million pesos. Ito yon. Okay, so that is 2.5 million pesos. That is what? That is 100,000 times the intrinsic value of 25. Okay? Then the ordinary share should always be at par. So that is 100,000 times the par value of 20. Saan yun? Ito, par value of 20. So this is 2 million. And the share premium, that is the excess amounting to 4.5 million pesos. So this is 4 million plus 2.5 minus 2 million. This is now 4.5 million pesos. That is now your problem 3. Okay? So let's now go to problem 4. So dalawa na lang to. Okay? Dalawa na lang to. Tapos na ang share-based payments natin. Okay? So let's now go to problem 4. So sa problem 4 class, this is now the cash settled. Obvious naman eh. Bakit merong predetermined price? The predetermined price is an agreement wherein the basis of compensation would be the difference between the succeeding value of the shares minus the predetermined price. So market value of the shares minus the predetermined price times the phantom shares. The phantom shares is a ghost shares. Ghost in the sense na hindi naman talaga ibibigay ito. Ang ibibigay dito class is cash. Diba? Going back to the concept map, ang ibibigay talaga dyan ay cash. And that is in the form of share appreciation rights, and that is considered as a liability until after the payment has been served. Okay? So the increase in liability would be your compensation expense times the phantom shares. And again, this can be vest immediately or do not vest immediately. Vest immediately means there is no service period required or vesting period required. Therefore, the total compensation expense should be recognized in full at the date of or at the year of grant. Okay? And do not vest immediately, so the total compensation expense should be allocated based on the vesting period. And when we say do not vest immediately, there is no required vesting period or there is no required service period to be to be accumulated by the employee to enjoy the cash settled payments. So in problem 4, so this is the scenario for problem 4. So in problem 4, sabi niya, the predetermined price is 50. The number of shares is 40,000. Then we have the service period of 3 years. The exercise date is December 31, 2023. And the share appreciation is to be paid upon exercise. The share appreciation right is exercised on December 2023. Okay? So, this is also called the intrinsic value of the rights. Remember that the intrinsic value method under the share options that is used whenever that the fair value of the date of grant is not given. Okay, so that is the market value of the shares minus the option price. Ito din, the market value of the share minus the predetermined price is also called the intrinsic value. Okay, so this is also called the intrinsic value. This is, however, multiplied with the phantom shares. While in the equity settled, this is multiplied with the number of share options. Okay? So the entity now will recognize a liability here until after the payment has been served. Okay? So here, so for 2021, what is now your compensation expense? Okay, or the salary expense here for 2021. You have your phantom shares and that is 40,000. Hindi yan ibibigay eh. Kaya siya phantom eh. Okay, times the intrinsic value of the rights. The intrinsic value of the rights is the market value of the share in 2021. Okay, minus the predetermined price of 50. Okay, so this is ilan? 24. This is now the total compensation expense. Ganun ulit yan eh. Okay? The vesting period, that would be to compute for the compensation expense times 1 over 3. The vesting period here is 3 years. This is just the first year, no? So this is now 960 times 1 over 3, 320. The cumulative compensation expense prior years, so that is 0. This is just the first year. This is not the compensation expense. The entry here would be a debit to salary expense and credit a liability or the share appreciation rights. Okay, so this is now 320,000 for the first year or 2021. In the second year, 2022, so your phantom shares remains to be at 40,000 times the intrinsic value of the rights. The intrinsic value now is the predetermined price versus the market value of the shares. The market value of the share in 2022 is 110 minus 50. Again, this is the basis of the compensation, the difference between the market value of the share and the predetermined price. Remember that when you are using the intrinsic value, okay, ang ginagamit mo, market value of the shares. Kasi sa problem solving, ang daming market values na ibibigay sa'yo. Okay? Stick to the concept that whenever that we are using the intrinsic value, that is based on the market value of the shares minus the option price for the share-based option, for the share-based or for the equity settled payments, and minus the predetermined price under the cash settled, no? Cash settled payments. So the market value of the shares here is 110 minus the predetermined price of 50. And this is what? 60. Okay? So 40,000 times 60, and this is the total compensation expense of 2.4 times 2 over 3. Okay, this is now the second year, and this is now the cumulative compensation expense amounting to 1.6 million pesos. Minus the previous cumulative compensation expense, and this is how much? This is 320,000. So 1.6 million minus 320, and that is your compensation expense for 2022. Debit salaries expense and credit a liability here, or share appreciation rights. In 2023, this remains at 40,000, while the intrinsic value is how much? This is just 120 minus 50, and this is 70. Okay? So this is 40,000 times 40, and this is now your total compensation expense. So this is 2.8 million times 3 over 3, and this is now the cumulative compensation expense equivalent to 2.8 million pesos. Okay? So minus the cumulative compensation expense for the previous years. So this is 1.6 million pesos. So this is not the compensation expense for 2023. This is 1.2 million pesos. So debit salaries expense and credit a liability, and this is the entry for 2023. Once this were exercised, halimbawa, sinabi ba dito na in-exercise lahat? Yun, the share appreciation rights is to be exercised in December 31, 2023. If that is now exercised, babayaran na yan ng cash. And how much is the obligation? Di ba 2.8 million pesos? And credit cash amounting to 2.8 million pesos also. Okay? So that is now your problem 4. Let's now go to problem 5. In problem 5 class, ang sabi dito ay ganito. So, January 1, 2021, merit company granted to an employee the right to choose either 15,000, 10 peso per value of ordinary shares, and cash payments equal to the market value. Cash payments equal to the market value of 12,500. Okay? So the cash payment class would be a liability, no? That should be the intrinsic value or the difference between the market value of the share minus the predetermined price. However, kung wala yun, wala eh. Walang binigay na ganun eh. Okay? So, walang binigay na ganun, then you will be using the market value of the share. Okay? Sige. Anuhin natin yan later. Isa-isa. The grant is conditional upon completion of the 3-year service. So, the 3-year service here is the vesting period, 2021, 2022, and 2023. Okay? So, here, the fair value of the share at the grant date is 76.50. Okay? Then the share prices for the 3-year vesting period are 81, 90, and 97.5. And the company has estimated that the fair value of the share or equity is 72. Okay? Or the equity alternative. And assume the following situation. So these are independent situations. Okay? The employee choose the share alternative and the employee choose the cash alternative. Okay? If there is now an option granted to the employee to choose whether equity or cash settled, your step number 1 is to determine the amount of the compound financial instruments. And under IFRS 2, okay, the value of the compound financial instrument should always be the fair value of the equity alternative. Ito yon. So, yan ang simula mo. The fair value of the shares, and this is the fair value of the shares or the equity alternative. No? So, yan ang simula mo lagi. Okay? The fair value of the share or the equity alternative. So, nasan tayo? Ito. So, that would be 15,000 shares times the fair value, the company, the fair value of 72. Okay? And that is now your equity alternative. Again, you will always start, okay, at the uh, amount of the compound financial instruments. And the amount of financial instruments is the fair value of the equity alternative. So, ito yun. So, that is 15,000 shares times 72. That is the starting point. Pag na-compute mo yan, class, ang sunod mo dyan is the liability. The fair value of the obligation. Okay? The fair value of the liability. That is the priority, ha? So, mauna muna yung liab, then the residual amount will be the equity component. Meaning, this compound financial instruments has the so-called liability component. Ito yung liability component niya. And this is now the equity component. Okay? Laging ganyan ang sequence. Laging mauna ang liability, ha? Okay. So here, this is your liability. This is supposed to be your phantom shares, no? Phantom shares times the intrinsic value. Okay? So, however, class, wala naman eh. So that would be your fair value now at the date of grant. Okay? So that is now 12,500 shares times the fair value of the share at the date of grant, which is 76.50. And that would now be the liability component. And the equity component now is the residue. 1,080,000 minus 956,250. This is now the equity component, 123,750. And that 123,750 would be divided into the number of vesting period. And the number of vesting period is 3 years. So 123,750 divided by 3, and that is 41,250. This is now the equity component per year. Okay? Equity component per year. Equity component per year. Okay? That is just the total equity component divided by the number of vesting period. So this is the vesting period 3. Okay? So this is divided by the vesting period. Okay? Divided by vesting period. Okay? So this is now the equity component per year. So, let's now go to the liability component. Okay? So, the liability component, gagamit ka ng, nasan ba yung meron tayong phantom shares kanina? Ito. Yan. So, this is your phantom shares. Okay? Or the stated number of shares. Ito yun, no? Yung 12,500. Okay? The phantom shares, cash payment equal to the market value of 12,500. That is the phantom shares. And again, there is no intrinsic value. Ito sana yun eh. Okay? That is the market minus the predetermined. Wala namang predetermined dyan. So you will now be using the fair value of your shares. Okay? So that is now for 2021, this is 81. So this is now the total compensation expense. And pare-pareho na yan. This is now times 1/3 because this is just the first year, and the cumulative compensation expense here is 337,500. Okay? Divided by or minus the cumulative current year, cumulative compensation expense for the previous year, compensation expense for the previous years, and this is 0. So this is now the liability component. Compensation expense related to the liability. That is 337,500, And we have the equity component here of 400 or 41,250. And this is not the compensation expense for 2021. Okay? And the entry for that, for 2021, is you have the salary expense of 378,750 in total, broken down into two. The liability component of 337,500 and the equity component in the form of share options of 41,250. And this would be the same pro forma entry in the succeeding years. So the quantum shares in 2022 remains at 12,500. So the fair value is what? 90. Fair value is 90. So this is now the total compensation expense of 1.125 thousand, 1.125 million. And this is now times 2/3. And this is now the cumulative compensation expense of 750,000. And the cumulative amount of compensation expense prior years, and this is what? 337,500. This is now again the liability component equal to 412,500. And the equity component remains at 41,250. Okay, so this is now your total compensation expense per year for the year 2020. Entry would be debit salaries expense 43,750, a credit to a liability or share appreciation rights of 412,500, and the equity component here in the form of share options is 41,250 still. That is for 2022. For 2023, you have your phantom shares again of 12,500 times the fair value of the shares in 2023. That is how much? 90. Oh, 90 ba? Hindi. That is 9750. Okay? So this is now the total compensation expense times the cumulative number of periods rendered divided by the vesting period, and this is 3/3, and this is now 1.2821 million pesos. Minus the cumulative amount of the salaries expense in the prior years of 750,000, and this is the compensation expense related to the liability or the liability component. And the equity component is still 41,250. And this is now your compensation expense equivalent to 510,000. Okay? So that is for 2023. So the entry for that would be debit salaries expense of 510,000 and credit a liability amounting to 468,750 and credit share options of 41,250. Okay? So, yun yung entrada dyan. Then, the next is assuming that the following, assume the following situations. These are independent alternatives, no? So, one, the employee choose the share alternative. If the employee choose the share alternative, okay, so debit share options, and the share options here is ito, the 400, the 1 point, no, the share is 123,000, no? 123,750. Okay? Nasaan yun? That is the equity component. Okay? This is now the third year, di ba? So that is 123,750. Then debit liability here. O kasi hindi naman ginamit, 128,750. Ordinary shares, so this is what? 150,000 pesos. Okay? Equivalent to the par value. And the par value of the share is 10. Okay? So that is 15,000 times 10. So that is 150,000. And share premium amounting to 1,193,500. Okay, 1,192,500. If the employee choose the cash alternative, so debit a liability of 1,208,750, okay, and credit cash amounting to 1,218,750. Okay? Then you have the share options. This refers now to the uh, alternative that was not been chosen, no? Ito, hindi naman pinili ito. So this is 1,237.50 and credit share premium of 1,237.50. Okay? So that is now your share base payments.